All right, we've got about 2 minutes until we are going to get things underway. If you want to enter into our giveaway that we've got going on for the stream tonight, type HT into the chat. Looks like Jay Gold and George Park are already breaking the seal on the chat, so we've got our first two entries into the giveaway. But minute 45, we will get things kicked off for the upcoming week. All right, there we go. A minute till we get going and the entries are starting to pour in. Let's start getting this thing populated real quick with some of the entries. Let me make sure this takes up half the screen right here. I want this to take up the other half. And we will start getting some of these names typed in. They're pouring in right now. Here we go. We've got Jay Gold, 1, 2, 3, 5. George Park, 63. GW Gallo, 12. Papa Steve, how's it going? We've got Jules. We've got DigiNets. We've got JW in the YouTube chat. There we go. I think we're caught up. 30 seconds until we get this thing going. And then, of course, for entry number 8, we've got P-Dog. Welcome to the chat and welcome to the stream, P-Dog. All right, there we go. 2 seconds, 1 second. We are going to get this thing started. We've already got Papa Steve giving a shout out to the 49ers. Shout out to the 49ers for making it to the playoffs. Stressful game this afternoon, but we're in a much better mood right now than I was roughly 3 or 4 hours ago. We've got a few more entries right here. We've got Dan in the YouTube chat. We've got JJP in the YouTube chat. Mark G, welcome to the stream and welcome. Way to finally find your way into the chat. Anthony C, welcome to the stream and welcome to the HT giveaway. We've got 12 entries in there right now. If you're tuning in, you want to enter into our HT giveaway for an HT branded Yeti tumbler at the end of the night, feel free to type HT into the chat and we'll make sure we get all those tallied before we do the giveaway. But let's get it going. So welcome to another weekly edition of our stock market scan stream that we still do not have an official name for. We're working on that. Maybe if anyone here is better at branding than we are, feel free to throw a suggestion in the chat. We can we've got some room to work on that one. But you know, taking it from the top, recapping last week, obviously not a great week, and one of these things where, you know, we try to be as transparent as possible every single trade, regardless of if it's a winner, if it's a loser. You know, we are going to share it with you. Had a lot of losers last week, ended up losing about $8,500, which is, you know, never fun, but it's the reality of trading, right? There's so many different people on social media who are like these, you know, claim to be these finance influencers who talk so much about their winning trades and winning trades and winning trades. And if you look at what they've provided, you know, they don't really show any losers. So if you run into any stuff like that, I would definitely be suspicious because this is just the reality of trading. But, you know, here's the thing. This has happened to us before. We've made it back. And, you know, before we get into the negativity and talk a little bit about what happened last week, let's start with a little bit of positivity here, because even though we lost, you know, 4.73% last week, obviously not a great way to kick off the year. You know, this has happened to us before, and it's, you know, not going to be the first time. It's not going to be the last time either. But if we take a look back to, you know, 2021, our year-to-date summary, keeping in mind that we lost about $8,500 this week, you know, we could pick out 1, 2, 3. We've got a fourth instance down here where we lost even more money than that. And then in all these instances, you know, this was recovered within 2 weeks. This was recovered within 2 weeks. And in December, it was recovered within 2 weeks. So every time in 2021 where we lost, you know, an amount equal to or greater than what we lost this past week, we made it back within 2 weeks. And that's kind of the value behind our strategy, right? We're continuing to lower our break-even prices week after week after week. You know, we've got our new break-even prices thrown out into this little table right here. We can go over that a little bit later in the stream. But, you know, in short, we're confident that we're going to be able to recover. This is just a bump in the road. This is all part of the process. Shout out to Joel Embiid. We're going to trust the process, and we're going to come back the way that we always do. It looks gross right now because we've had 1 week of 2022, but just hang in there with us. And for those of you who are new following along, going back to that 2021 tab that we had shown in there, our best weeks that we ever have are typically after the worst weeks. So if you're joining us right now, this is a phenomenal time to join, and welcome. But talking about what happened last week, taking it from the top, BRPM is a stock that we're going to keep holding on to. I think it was announced this past week. They had an S4 filing letting us know that they're not going to have their merger in Q1 as initially planned, but rather in Q2, which is kind of good news for us because we can just continue to hold these shares for another 3 months and just wait to see if there's some sort of spike in the stock. And we already established that, with the nature of these BRPM shares, it's a SPAC. So there's kind of a price floor right around $10 a share, so not a lot of downside, especially, when the market's getting a little bit shaky, a little bit uneasy. This is a good play to have sitting in the back of your portfolio. Definitely lower risk because it could really only go down to, 10, 990-ish a share, but definitely some serious upside there if this thing decides to take off at any point in the next few months. Palantir is one that we have just been following down a very, very dark hole. Definitely contributed big time to some of the losses that we had this last week. It took about $2,700 from us. If you go to our breakout tab, we've got a decent bit of a hole right here. We're down about $8,200 on the trade overall, but this thing has dropped in just 4 weeks. It's dropped 33% on us. So, that's just something that happens, right? That's just part of the process. Sometimes, not every stock is going to move in your direction. We just need to be able to play defense. This is definitely not one that we're going to be able to, resolve in the next week, 2 weeks, maybe not even the next month or two, but I'm confident that if we stick with this one, it's been so oversold, we could pull up this Palantir chart right here just to, kind of put some context behind what we're saying here. But if we back it out to 180, this thing's so oversold, we got it back down in the blue right here. What do we know about RSI when we talk about it on the stream is when this thing gets down into the blue, it's begging for some sort of short-term rebound. So we want to put ourselves in position to collect that potential short-term rebound. So for Palantir for the upcoming week, we can kind of cut ahead here, a little spoiler alert. We rolled forward the 18.5 strike puts that we had, sold 18.5 strike calls. I'm not in love with this part of it. I just, rolled forward the straddle as it, initially existed. If it gets back up to 18.5, we're going to recover a very good amount of money. If it runs past that and we regret selling the calls, that's going to be okay because if it gets past 18.5 next week, we're going to be sitting on some nice weekly profits. But again, just keep rolling these things forward, lower that break-even price when we can, and hope that we can eventually, kind of claw back to zero. For, another instance of, hey, this has happened to us, we've been here before. GHIV is one that we have hidden on here, but a great example, right? We were down, a really decent amount. We were working with less collateral here, so the numbers are a little different. But we were down $4,000 off the bat. Even 7 or 8 legs into this trade, we were losing another 1,000 right there. But in the end, this thing started in December of 2020. We wrapped it up in June of last summer, and we took home $11,000 of profit. This took us 7 months from beginning until the end of this trade. So patience is a virtue. It's a must with positions like these. But, this just goes to show that if we have that kind of patience, we can sit and wait around forever and try to recover the trade. Being down $8,200 is not the end of the world. We've been on this trade for, about 2 months at this point. I think I forgot to update this part of it, so that 4-week portion is a little incorrect. But we've been on it for 2 months. GHIV is one we sat on for 7 months. Like, we still have a long way to go. You can see that we've gotten our break-even price from 24.8 down to 22.3. And if we took assignment of these 18.5 strike puts, our break-even price would be all the way down to 20 a share. And if we look back up at the 180-day chart, this isn't the worst basis. If we draw a line at 20 right here, not the worst place in the world to own the stock. It could very easily bounce back up here and we would be fine like none of this ever happened. But, we're going to keep playing this with our option selling strategies week to week to week. So not a whole lot to talk about here. We're just going to be patient and wait for a rebound on that one. Moving down the list, this is definitely one that I want to talk about. These Roblox April 70 strike puts, and they expire in April. You'll notice this is a little bit larger of a position, right? This takes up actually 57% of our account fully cash here. But the great thing about this position is the fact that we're able to use our margin privileges to only take up about 10,000, aka about 5% of our buying power on this one. So the value proposition here is we can have a little bit larger of a position, a very high percentage position, right? If we take a look at the Roblox chart, let me bring this up for purposes of the conversation that we're having right now. You can see it right here. 70 is our max profit point. This second red line down here at 67 is our break-even price. So, pretty high percentage here. We'd love to look at RSI. It's definitely begging for a little bit of a bounce. We think if this thing could bounce back up to the mid-90s or even touch 100 again, the price of these options that we've sold for April are going to just absolutely tank. We did not have the best timing in the world. As you can see, I think we entered right around here, and it's dropped $10 in the meantime. But, in this range between 70 and, 90, there's a lot of chop between, June of this past year and November of last year before it gapped up above 100 a share. So I imagine that we'll see a little bit of a chop and less of this just sheer drop-off that we've seen over the past couple months on this one. So definitely one that I'm still confident in. I love the way that we talk so much about return on risk, but return on capital is the return that we're generating off this margin portion right here. And if these do eventually expire worthless, meaning that Roblox finishes above, 70 a share, we'll be generating $5,700 of profit off $9,900 of collateral, meaning, we get a roughly 57% return on capital in 3 months. And, we know that if we could get a 57% return in 3 months, we absolutely take that. So that's the value proposition that we have set up right there. I don't really want to talk too much about what happens if this goes south because there's still a long way between 84 and 70. But if it does, you could look out to these April options that we have up here. And you could definitely get some comfort around the fact that we'll be able to roll these pretty decently, right? Even if you just look at the money, there's about $10 of extrinsic value right around the money. You can see it in this column right here. So if, Roblox gets down to 65 or down to 60 and we're sitting at a loss come April, we could sell something for 10 of extrinsic value, roll these forward, 3 more months to July, which is partially why we picked these expiries because they're equidistant. But we could roll it forward to July and lower that break-even price from 67 to 57 fairly easily. The con is that we have to wait 3 more months. The pro is that, we just hang tight and we have a lower break-even price and we could theoretically roll these things and wait forever. And that's the advantage of our strategy. But, that's the idea right there. If you're not using margin, I don't think it's one that I would recommend. But for those of you with decent margin privileges in your accounts, that's a really good opportunity right there. Obviously, this thing almost doubled in price last week, so we did not time it beautifully. But, if you missed out on this one and are looking to get in on one, I think the timing is fantastic now. But definitely scary to see the $3,400 loss right there. But what we do know is that, if this finishes below 70, from here on out, we're going to be making roughly $9,000 off of it. And just that alone is enough to recover what we lost in the market last week. So as bad as last week was, we could simply think about it by saying, hey, even though we lost all this money last week, we could close every other position. And as long as Roblox finished above 70 in April, we're making money overall in the year. So that's how easy this path back to profitability is. And there's actually a way for us to get back profitable next week. I don't think it's going to happen, quite honestly. I think we're probably 2 or 3 weeks away from breaking even on this. Goal right now, obviously, short term, just to finish with a profit in January. If we take a look back at 2021, that year-to-date summary, we didn't lose money a single month out of the year, which is something I'm super proud of as far as our performance is concerned. While we did underperform the S&P 500 in December as a result of this, huge loss, right? We lost 11.7K the first week of December last year, and still managed to pull out a profit. So that makes me even more confident the fact that, if we lose whatever it is, where's our year-to-date summary? If we lose 8,500 in a week, we could very, very easily recover that. So that is what we're looking at with those positions. We talked about Palantir. DraftKings is a good one. We'll save that, right? We made a little bit of money on it last week because we doubled down on it when it dipped and it bounced back up by the end of the week. So we took home about $950 on that, and that's the great part of our strategy, right? These losers that we have on a week-to-week basis, we can recover those, but the winners, we close those positions out, we lock that profit in, and we're moving on to the next position. So super, super happy with the way that one has panned out for us so far, and we took a little bit of an aggressive position on that we could talk about later in the stream. Fubo is one that has been dropping against us pretty poorly. Very unfortunately, if we bring up the Fubo chart, we could see it's another one with one of these just sheer drop-offs. And as far as overall trends in the market are concerned, this is one, especially when it's trading around 25 and 30 a share, the valuation of this stock and the market cap that it was trading at just quite frankly didn't make sense. There's this whole area of, the quote-unquote growth stocks that you'll hear about if you follow along in the market. And with the Fed raising interest rates, a lot of these growth stocks are starting to have the air kind of come out of the tires, so to speak. But that is a lot of what we're seeing right here. It's what we've seen with Palantir, but at some point the bleeding has to stop, right? I think a lot of this is a little bit of overreaction on the front side. Could these things continue to bleed out? Absolutely, but it's very rarely a straight line to the bottom. That's evidenced even by what we saw back in December with Fubo, right? When it dropped from 35 down to 16, it bounced all the way back up to 21 before continuing downwards. So for this little leg down, we could say here, going from 17 down to 13, you'd imagine there's at least a little bit of a jump off. And that is what we've set ourselves up for if we go to this Fubo trade breakout tab. There you go right there, right? So great example of us using the H2 wheel, being conservative with our buying power off the bat. Step one here was we sold these 16 strike puts, and we did all this when Fubo was trading at 17.5 a share. So, good info to know up front here is the fact that Fubo has dropped 20% on us in, 3 weeks, and the dates are correct here. So it has literally been 3 weeks. Fubo has dropped 20%, and yet we're still, in position to not really lose any money on this trade, right? Our break-even price as of last Friday afternoon is $14.12. The stock's trading at $13.97. We're sitting relatively pretty as far as this one's concerned, but here is how we did it. The process is the important part of this, right? We sold 16 strike puts. We took an initial loss on those, but here is the, the big thing from step one to step two here is we rolled down and we rolled out. If you follow our H2 wheel videos, take a look at the diagram. Usually step two is the covered strangle. But what we know about the covered strangle is that we increase our position size. And when we increase our position size, we increase our risk. And that's not necessarily something that we want to be jumping into right off the bat, especially when the market's looking like this and you're seeing these sharp declines in the stocks that we're holding. So what we did was we rolled down and we rolled out for a credit. That means we sold the lower strike, we rolled down, and we sold it for a credit, meaning we sold the lower strike for more than we bought the old one back for, meaning we increase our potential max profit by the credit, and we also decrease our break-even price pretty significantly, right? When we rolled down and out, we went from a $15.84 break-even price to a $15.21 break-even price. And then from there, Fubo dipped even further, and this is when we started to increase our position, right? If we go back to the Fubo and we could pull up the 5-day chart here, this might be a little bit more helpful for illustrating what happened, right? When we see this big drop-off, I think the 5th is when we did it. When it gets down to 14 a share, we say, okay, this thing's gone from 1665 on the 3rd of January, Monday, down to 14 a share by Wednesday. That's a pretty significant drop. Especially we like to look at RSI. RSI was definitely begging for a little bit of a bounce. So we say, we didn't want to increase our position size off the bat, but maybe now is a good time to do it. So we entered into some 13.5 strike puts, which in plain English, when this thing was trading at 14 on Wednesday, we basically said, hey, over the next 48 hours, as long as it finishes above 1350, these 13.5 strike puts that we sell are going to be max profit. And those were offering a decent amount of credit for us, right? 19 cents of credit. And what do we know about trades that we like to target as far as an entry perspective on cash secured puts? We know that we want to get greater than a 1% return on risk on cash secured puts. So 13 cents, 13.5 cents if you want to be technical, is a 1% ROR on these Fubo 13.5 strike puts. So the fact that we were able to get a 19-cent credit is basically a 1.5% ROR, especially over a 2-day period, means that, this is definitely within the realm of return that we look for when we enter into a trade. So we did that. We know that since we had 10 of these sold originally, if we sold 10 more, that was going to be a cent for cent reduction of our break-even price. So when we averaged down to the 13.5 strike puts, our break-even price on the trade went from $15.21, which is what it was after we rolled down and out to that position, to $15.02, since it's going to be reduced cent for cent by this 19-cent credit that we had. And then I'm sure you're probably skipping ahead a little bit. You see by the end of the week, Fubo wrapped up at $13.97 a share, safely above that $13.50 mark. So that expired worthless. But now, we get to the end of the week. We know the 13.5 strike put's going to expire worthless. We're still sitting on these 15.5 puts. So the question, is what do we do, right? We have a 15.02 break-even price. Fubo's at 14. Generally, what the mentality that we want to approach these position management situations with is, can I get my break-even at or below the stock price? And the answer here is that, even though we were $1 above the current stock price of 15.02 break-even versus the 13.97 stock price, we were able to get pretty close. And I mentioned, we kind of forewent the covered strangle for step 2, and the reason being is because you always want to remember that things can always get worse, and here they absolutely did. So if we had gone into a covered strangle off the bat here, we wouldn't have had the flexibility to do what we did this upcoming week. So for the upcoming week, we entered into the covered strangle. We went into part 2 of the HT wheel, and that means we take manual assignment by buying back the 15 strike puts so we get shares, selling covered calls on the shares, and then selling some more cash secured puts. It's a strangle in the sense that you sold options above it and below it. Above it meaning we sold covered calls above the price. Strangle meaning we sold options below it, meaning we sold 13.5 cash secured puts, which is below that current price of $13.97 again. So taking a deep breath, all in all, what that means is from that 1502 break-even price, our break-even is then reduced by 47 cents and then an additional 44 cents, because you can see right here, I kind of broke it out in 2 separate things so it was a little bit easier to follow. We reduced it by 47 cents to get right here to a 14.56 basis after selling the covered calls. And then after we added the 13.5 strike cash secured puts, we reduced it by an additional 44 cents, which gets us to our ultimate break-even price of 14.12, which right around that price of Fubo. So, mission accomplished, right? And you might say, hey, this is still a little bit above the current price of Fubo, but let's take that step back to what we talked about before we ran through what we did with this trade, right? Fubo in just over 3 weeks has dropped over 20% on us. That is insane. That is an insane drop. That's not going to happen all the time, right? A 20% drop in just 3 weeks. And so often with this strategy, we get the question, hey, if the market completely crashes, what happens with the strategy? It's super easy to make money if the market's always going up. And you'd be correct. It's very, very easy to make money out there if the market's always going up. But where you make your money is how you're able to manage these positions when things are moving this sharply against you. And while we haven't had a full-on market crash, right, because this is somewhat disconnected, this whole growth stock area is somewhat disconnected from the S&P 500, the moves that we've been seeing downward in these stocks, right, with Palantir dropping 33%, DraftKings dropping 24%, and Fubo dropping 20%, this is kind of in line with what an overall market crash would look like for a lot of these stocks. So this is the answer to how we manage that. And did we get a little bit unlucky with some of these moves? Absolutely. These aren't normal, downward moves in the market. But at the end of the day, Fubo, break-even price $27.52. If Fubo, break-even price, 14.12. If Fubo finishes right around, 14, we're sitting on a tiny loss. DraftKings, which we'll talk about in a minute, $27.52 break-even price after starting at 36. This thing's dropped 24% on us, and we're still hovering around break-even. So that's kind of how this happens, right? And we have this trade performance thing, and we're going to do a better job tracking it this year of, keeping track of our performance on individual trades. And I think what we like to say every week, which is, kind of lame, very, very self-explanatory, but as long as we don't lose, we win, right? And we have a lot of these trades that are losers. Palantir's a loser right now. DraftKings is actually turning around. It's, in 2022 so far, it's made money for us, but, this trade tab right here has some 2021 stuff in it that we've ignored. But, the point is we can keep working this break-even price down, and even as these things move against us, even if we just make $1, that's winning the trade. And as long as we win the trade, we are going to do very, very well in the long run. So after that quick rundown on what we did on Fubo, how we managed that one, even in the face of a 20% downturn, let's quickly update the HT giveaway. We'll finish up the back end of last week's recap, and then we could talk about the upcoming weeks. I think, to the point we made at the top of the stream where some of our best weeks come after some of the worst weeks. I'm super excited about objectively what we're sitting on heading into the upcoming week, and I think they're in the face of the downturn that the S&P 500 has kind of seen over the past week, there is some very, very good opportunity upcoming in the market that we can be very, very happy to talk about. And we've got some good scanner stuff I want to talk about. I've been playing around with that a little bit. And the premium members of the Discord server may be getting their own IV reversion bot sometime this week. So instead of having to check that scanner and have that called out, you'll get alerts in the chat for that. So I think that's going to be something that is should be pretty useful, right? Because we don't have a lot of IV reversion opportunities. RCAT was an IV reversion trade, one of the lone winners from last week. So I think the more of those that we get, the more money we're going to make. Definitely a lot of opportunity out there. It's just a matter of kind of finding it and setting up systems, building bots for our Discord server to alert us to some of those opportunities. But let's update the HT giveaway. Here we go. We left off at Anthony C from the YouTube chat. So we've got a few people we're going to have to fill in here. We've got Alex Lee from the YouTube chat. We've got Electro from the Twitch chat. Oh, messing up again here. Good stuff. My mouse, the wireless mouse has actually died on me midstream, so I'm using the trackpad on my laptop, which is about 3 feet away from me. So a little bit of an awkward setup right here. It's probably for the best. I don't have the webcam going right now. But that is our current situation. We are rolling with it. JYEAW3 in the Twitch chat. I got to scroll a little bit further to read the rest of the chat. We've got Matthew M in the YouTube chat. Welcome back, Matthew M. Diamond Handsy's used HT in his message. We'll count that. Diamond Handsy's, welcome back. We've got Marvin in the YouTube chat. We've got S. Grabner in the Twitch chat. Let's keep scrolling down. There we go. We've got Rakesh in the YouTube chat. Welcome back, Rakesh. Sleepy Condor, one of the HT community's finest, checking into the chat. Matthew Ellis in the YouTube chat as well. We've got you in there. We've got Ryan B in the YouTube chat. And there we go. We've got 23 entries into the HT giveaway so far. So for those of you who have joined us and entered tonight, thank you for joining in, sticking in, and hanging out with us on the stream, and welcome to the HT giveaway. So for the weekly tracker, what we're going to want to do, right, is update the rest of what happened for the back end of last week. Nothing as involved. I think Roblox, DraftKings, and Fubo were some of the bigger ones that I wanted to hit on. But CRISPR was a great one, right? 71 strike puts. And some of these were really, really good examples of taking profit, right? Robinhood, we started off with 17 strike puts. And on Monday, let me pull up the chart here really quickly to kind of demonstrate what we did with this one. These 5-day charts are useful for telling the story of the week. But on Monday, this thing was pushing $19 a share. So we took the position of, hey, market could be a little shaky. It's just a Monday. We have the opportunity to take about 2/3 of max profit one day into the trade. We absolutely take that, right? So we banked $230 of profit on that trade, and that's a 17 strike put, right? And as we could see through the rest of the week, it went pretty decently below 17. So taking profit there was definitely the right move, and is, to the point we made a little bit earlier. Once we get this profit off the table, it's ours. We've locked that in. We're on to the next one. Losers, we can play defense on. We can recover and try to get back to break even. But the winners, once we got them, they're locked in. CRISPR is another good one, CRSP, that we took profit on early. Again, that was a 71 strike put that we sold, and you'll notice when we pull up the CRISPR chart, I think it's at 67. There you go, right? It was pushing 80 on Monday. We said, okay, one day into the trade, we're able to get about 50% of max profit. We're going to take that, and you'll notice that by the end of the week, CRISPR got all the way down to 67.5, which means that these would have been worth about $3.50. So we took $150 of profit, but if we had held on and not, been a little bit greedy, we would have lost $800. So that's about a $1,000 swing right there, just because we took that profit up front. And again, when the market starts moving moving against you, as happened last week when the S&P 500 took a little bit of a dive, having more and more of these positions during the week that you've already taken and locked in profit on really do, they go a long way to help out that net profit number at the end of the week. BKKT is one we admittedly knew was a little bit risky off the bat. We called it out in the Discord server. Probably not the greatest trade idea, but we were feeling pretty good after Monday after having cashed both of these out. So we said, I'll take on a little bit riskier of a trade, but there's a reason we call some of these things out as riskier, because this thing just kept on going. I know someone in the Discord server told a joke about, when we averaged down on the 6 strike puts, they said, just wait a little bit longer. You could be selling 5 strike puts pretty soon. And that wasn't too far from the truth. This thing took a pretty big dive against us. But I think this is one that is worth talking a little bit further about, right? Because this was one that was pretty popular among the social media crowd when it spiked up from 10 to 60 a share, went back down to 20, back up to 50. Every time you see that kind of price action, that's a stock that's going to take the forefront of that social media discussion. From our role as option sellers, that kind of movement's going to put some serious premium in the shares. But, we always kind of warn when we go through these scanners and things like that. These kinds of setups, if we look at it like this, are always, relatively doomed to fail. We've seen this setup so many different times. We always get a lot of questions. Should I sell 30 strike puts? Should I sell 25 strike puts? The answer is always zoom out the chart, take a look to the left. You know, if you see that it has decent precedent, especially what we see right here with this $10 price floor, knowing that this one used to be a SPAC, a special purpose acquisition company, these typically don't turn out very well, right? If we go IRNT, these are a couple that we know of off the bat. IRNT is now down at 3.7 a share. If we pull up, let's see, SPIR, another one jumped up to 20 a share and then went all the way down. It's down below 3 now. So we have a lot of these SPACs that we've seen before with this big setup, right? The big jump off of the bat and are now back down below 10 a share. So getting in on these above 10 is very scary. But why do we like this one? Why did we get in with the 8 strike put? The answer is, you know, the former two, IRNT, SPIR, had those pipe share unlocks that we like to talk about so much with these SPACs, right? Because the way that they raise money, the way that the equity is structured, they give all these shares to these early investors at a very low price. And sometimes it can be a pretty significant amount of the outstanding float. So the day that those shares get unlocked and those early investors are able to sell, they dump their shares, and you can see a pretty significant drop in the price of the stock, right? If you go to SPIR, for example, you know, this is when we learned about this, unfortunately, but you can see the drop from 12 down to 7 in one day. This is when they had that pipe unlock, and it just continued to bleed out. But with this pipe unlock, I think off the top of my head, the sizing of the amount of shares that were unlocked through the pipe investment was about 35 to 40% of the overall float. And for other little case studies of stocks that have had similar pipe unlocks, you know, this is kind of the price action we've seen, right? It steadies out down in the 6 and then kind of continues to bleed off. I think LIDR is another example of one that had a pretty big percentage pipe unlock price action, right? It bled pretty much down to this 4 level. But BKKT, their pipe unlock was only about 10%. So while they're at 626 right now, I don't quite expect them to get down to that 4 level that we saw earlier, just by virtue of that pipe unlock being a little bit smaller. So I was a little bit more confident. That's why, you know, I kind of reasoned with selling those 8 strike puts. We're not always going to be right. You know, it did definitely move against us pretty hard after that. Hoping it found a bottom at that 556 number and it could rebound up towards 7-ish a share for the upcoming week. But, you know, let's talk about how we manage that one. When you have an option that you sold for 20 cents that goes up to $1.80, that's obviously a pretty significant loss up front on paper. So if you go to the BKK trade tab, BKKT, excuse me, here's what we did. You know, we started with that initial position, and it's kind of a smaller position, right? Because it's less than 10 a share. It's only 800 per contract to sell one of these as far as collateral is concerned. So we got in on that. That was a 780 break-even price. And then on the dip, we sold the 6 strike puts. That was 20 cents a premium. That gets us down to 760 break-even price. So, you know, after that 760 break-even price, the stock's sitting at, if, you know, we type in, actually get the formula back in there. Stock finished up at 626, right? And I need to probably update this for what we did. And I thought I did. I don't know why that's not updated. But long story short, what we did to recover that, we know that if we close these out for, I think, $1.80-ish is what we closed them out for. You know, we're sitting on a roughly $1,400 loss right now. So what we did for the upcoming week to try to get this back, we could look down here. BKKT, right, we manually assigned ourselves the shares. We have the shares at 621. And then we sold 6.5 strike calls, which we know we're going to get that premium no matter what. The only detriment, the downside of those is that it caps our share gain at 650. But if it finishes above 6, there you go. That's another 370 that we get. And if BKKT runs all the way back up to 650, you know, we've already recovered, what are these three summed up right here? We've recovered $1,000, and we're kind of sitting back near a break even on BKKT despite that big downward move. But that's the way that we chose to manage that one. We're probably not going to get that all back in 1 week, but, you know, baby steps. We have all the time in the world. It was just the first week of 2022, and we have the entirety of the rest of the year to try to make it back. So you don't want to get, you know, too heavy too quickly and dig yourself in a really, really big hole that you can't recover. You know, even as bad as last week was, just getting near break even, I think, is a success for the upcoming week. So that was our goal with a lot of what we set forward. You know, Todd Miller making the point in the YouTube chat, you know, it doesn't seem worth playing these SPACs anymore. You know, that's not something I would disagree with. You know, we've seen the risk that is inherent with a lot of these things. You know, it seems like time after time we've just been chasing these things down instead of being the beneficiaries of a rebound. You know, so I don't hate the idea of starting to stay away from these a little bit in the future because there's so much more out there for us, right? Especially with some of these longer dated puts. You know, with earnings season coming back around, we've got a 10-day trade approach that I'm working on a video for right now. which we're going to try starting to put those a little bit more into play, because earnings are a great place for premium, for option sellers. I'm working on the IV reversion scanner. So, the idea is over the next couple of weeks, I put enough work into where, we don't need to be chasing these things off the top of the scanner. We can kind of write off SPACs once and for all. But yeah, this is definitely the kind of trouble you can get into. Nothing that I didn't think couldn't happen, but at the same time, nothing I don't think we can't recover from. So it'll be okay, even though it wasn't great off the bat. But moving further down, FFIE was one that we were familiar with. The 5-strike put that we had right there gave us a decent amount, right? So we would know that a 1% ROR on a 5-strike put would be 5 cents. With these going for a 9-cent credit, that's almost a 2% ROR for 1 week. And those really never came into any danger. So that was a nice $180 profit right there. Robinhood was one that turned against us as well, because even though we took profit up front and we're smart about it, we said, hey, we could jump back in on this for almost our original credit, and we did. And it unfortunately went against us. But again, we talked about Fubo a little bit. We talked about BKKT. We touched on DraftKings for a second, but with that HT wheel process, even though is this still the Robinhood chart? No, it's not the Robinhood chart anymore. But even though the stock moved, if I pull that 5-day chart up again, moved this sharply against us during this week, and we sold 17 strike puts, which is right around up here, we still have a pretty good path back to profitability. And the great part about this Robinhood trade, whereas with Fubo we talked about how we doubled down on it and we had to increase our position, with Robinhood we didn't even have to increase our position size. One thing that we did do that I think was pretty good, it was Thursday morning when this thing really, really broke downwards, right? We like to lean pretty heavily on RSI, and that is a pretty low RSI reading. And as you can see, that played out as expected, a pretty quick short-term rebound right there. So we sold some 15-strike puts, and we got a really decent credit on those, right? 31 cents is what we got on those for essentially what was a 2-day trade. So that did some serious damage, right? Our initial break-even of 1674, which is that initial 17-strike net of the 26 credit, was then further reduced by a 31-cent credit on the 15-strike put to get our break-even price to 1643. And then we were able to roll these things, that left us with the 17-strike put, which we were able to roll down and out. It wasn't for a credit, it was for a debit. But what do we know about when we roll things down? We know that if we roll our strike from 17 to 16, that's going to decrease our break-even price by $1, since the strike went down by $1. And normally when we roll things for a credit, that further decreases our break-even price. But since we rolled these for a roughly 20-cent debit, that was going to increase our break-even price. But when you take that 20-cent debit as compared to the $1 roll, overall, $1 minus the 20-cent debit, it decreased our break-even price by about 80 cents to get us down to this $15.65 break-even price. And what do we say when we try to manage these trades? It's that, hey, Robinhood is currently trading at $15.89. What can I do to get my break-even price at or below the current price of the stock? And the answer for us was just rolling down to the 16-strike puts to get ourselves to that $15.65 break-even price. So loving where we're sitting with that. Really, the golden rule here is if you don't need to increase your position and you could still get that break-even price at or below the current stock price, you absolutely do that. And that was a situation we found ourselves in on Friday. So very pleased with how this one is rolling along. Another one, right, where we talk about these stocks moving against us. This thing in less than a week, in 3 days, it dropped 10% on us, which is a huge move to the downside. Yet we're still sitting in a position where if it trades flat next week, we've got $240 of profit that we're going to be taking home after the trade moved against us pretty significantly. So very happy with that. That's the value in identifying these great premium, opportunities, because even if you're wrong, right? Because everyone, at the core of it, everyone in the stock market is guessing. But we are joining in similarly where we're making educated guesses. But if we're wrong, we have a little bit of a cushion. And every single week, if we continue to be wrong, that cushion increases. So that is how we manage that trade. Not worried one bit about Robinhood. So perfectly happy to keep that one up. And until maybe it bounces back into the 20s, I'm happy to continue selling puts on it, quite honestly. And then that takes us down to Open Door, which was, we thought we were being super sneaky on here with Open Door last week. This admittedly was kind of one of the worst trades because of how sharply it moved against us. We thought we were being patient. If you go to the 180-day chart, this thing had dropped from 23 all the way down to this 14 level again. A big red candle down to the 14 where it had previously exhibited some level of support. So we thought, if we sell some 13.5 strike puts, we're probably going to be okay. But as you can see here on the 180-day chart, we were not okay. Things did not go very well. If we go back to the 20-ish day chart, you'll really see how severe that drop was, getting down to 10.99 at the worst of it. So these 13.5 strike puts right here, which had the break even at the red line, did not go terribly well for us. And we lost about $1,400 on those. But I think this brings up an important point that we like to make, because we can follow that process of the H2 wheel as long as we like, right? We could have rolled these forward for a very, very small credit and got our break-even price from like 13.2 to like 13.15. But, on a week-to-week basis, if the benefit and the advantage that we have as option sellers is the amount of premium that we're collecting on a week-to-week basis. So if we're rolling something for like a 5-cent credit, we're really not getting that big advantage of being option sellers. So the issue with that so often is that if the premium is kind of gone to your break-even price, you're maybe falling into a little bit of a sunk cost fallacy. And I think the simplest way to evaluate that is if you had no money in the market whatsoever, would you open the position that you're about to open? And for a lot of what we do, the answer is yes. And I'm very confident in a lot of the trades that we make. But for this one, the answer for me was no. I would not have opened a 13.5 strike put on open door with the stock trading at, 11.36. That's just way too far in the money for me. And if I look at this overall 180-day chart, look where RSI is. Do I think there's going to be a bounce? Absolutely. But what scares me a little bit more, if you back out to this 3-year, this used to be one of those former SPACs. And while it's maybe one of the few legitimate companies that was taken public via SPAC, at 11.36, I worry there's still a little bit of downside at 10.55. So I wanted to protect myself against that. I backed it up, wiped the slate clean mentally, evaluated it by saying, hey, if I wanted to jump in on open door and took a look at the option chain right here, what would I have entered into? And the answer is these 11 strike puts, right? Because I do want to take advantage of the big move down in the stock because I think there's going to be a rebound. But at the same time, I want to protect myself from further downside movement. And selling the 11 strike puts for about 36 cents of premium gives you that 10.67-ish break-even price, which I think is going to be perfectly manageable. But if I went up to 13.5, as you can see, there's only 3-ish cents of extrinsic value on those. That's not something I want at all. So I went down here. 3.38% ROR is far and above that 1% that we try to target on a weekly basis. Wiped the slate clean, reminded myself that, hey, it's the very first week of the year. We have all the time in the world to try to make this back. We've got this trade breakout tab right here. If we do get this back, we're only at a 1.2K loss, meaning that if we sell $1.20 of premium, we're back to break even. And again, we can wait these things out as long as we want to. Our big concern here is just making sure that we don't put ourselves in so big of a hole that we can't recover from it. And that is what I wanted to avoid by rolling a deep in the money option on open door. So while we're not going to be able to recover from that one super quickly, it's one that I felt I objectively put myself in the best position in, for a week-to-week profitability perspective. So that's what I did right there. SoFi was a good one. We ended up taking profit on. It looked like it was going to be good. I can walk you through the chart really quickly of what that one looked like on Friday. Little bit of a letdown at the final hour right there, right? It was kind of pulling back with the rest of the market. We knew that we had some decently established support that we'd previously charted out at that 14 level. So when we took a look at the 20-day chart, saw it reapproaching that 14 level, we said, okay, it was trading at 16.49 on the final day of 2021, and even beyond that to start off 2022. It's trading around this $16 level again. So, a 14 seemed relatively safe, especially after these two big candles, which would lead you to believe that at least in the short term, there's going to be a little bit of a bounce. So we snuck in 14 strike puts on Friday if we pull up the one-day chart. It was kind of messing around at that profit point. It got up around 14 at about 1 p.m. We're saying, okay, we can ride this one out because there's still a decent amount of extrinsic value on it. But when it dropped down to this 13.90-ish level, a lot of that extrinsic value went out the door. And what I was worried about and what played out was some further downside potential into the back end of the day. So I just said, hey, we had so many trades this week that were losers. Why take a trade that's a winner and risk having it become a loser? Take that profit. You're never going to go broke taking a profit. And if we really want to play SoFi, we can try it again next week for even more premium at a lower strike. So we took $80 of profit on that. A little disappointed we didn't get max profit, but beggars can't be choosers when the market's turning south. I'm just happy that that one was a winner at all, because when we don't lose, we win. ASTS is one. I think it bounced back above that 750 level. Let me check really quickly. 746 is where it settled on Friday, so we're perfectly happy to let that one run its course for a couple more weeks as we approach the January 21st expiry on that one, with our break-even price being 710 a share. So that is one benefit to those longer dated ones. ASTS, we sold the January 21st strike just because there aren't any weekly options, but one advantage to those monthly options, if you're in on a few of those, is the fact that, if the market really turns against you, typically for longer dated options, you're going to have a little bit bigger of a cushion. So there's, less of a panic when you see some day-to-day big dips in the market. But 50 minutes into the stream, that is our weekly recap. Definitely a longer recap than we like to have before getting into what we're looking at for the upcoming week. But I think a lot happened last week. I think there was a lot to be learned from what we did. So I definitely wanted to spend some time touching on that, talking about how we managed our different positions, because, 2021 was a decently easy year, right? There wasn't too much volatility. There's definitely volatility. There wasn't too much of a pullback or anything of that nature in the market. We're starting to see that for a lot of the stocks that we're holding right now. So it's important that we know and understand how to play defense on these, because that is what we have to focus on when we have things moving against us. It's really easy to open up an option, have it expire worthless, move on to the next one, and not even think twice about it. The skill or, challenge to what we're doing here comes when things are moving against you and you actually have to step up and figure it out how you want to manage that position. So that's why we touched so much on how we did manage those positions that we had from last week. Lost about 4.73% of the market, $8,500. But again, to those of you who are watching, the one point that I cannot emphasize enough is that this has happened to us before, right? We have 1, 2, 3, 4 different weeks in 2021 where we lost even more money than that. And they were all recovered within 1-2 weeks right here, within 2 weeks right here, and recovered once again in 2 weeks right here. So while it sucks because this was the very first week of 2022, and who wouldn't want to start off the new year profitably, we remember that we recovered these all so quickly in 2021. We didn't lose money a single month in 2021. Am I guaranteeing we're going to be, skipping into February with the profit? Absolutely not, but I definitely think there's a decent path back to profitability for us. And one of the games I like to play at the beginning of the week before we jump into our analysis is, how am I positioned with what I have right here? We know that we like to take a stack of trades into the week and have at least somewhat of a plan as we head into Monday morning. But the truth is that there's so much activity in the market on a day-to-day basis that so much of the activity and what we end up with by the end of the week is, entered into during the week. But going into the week, we definitely want to have some long positions and have some sort of money in play. And the best way to evaluate, where we're sitting at with that is kind of playing with some of these values right here. So I don't want to count on a bounce or anything like that, but I think we could definitely agree that a lot of what we're holding on to is decently oversold. So for example, if Palantir even jumped back up to, 750, which is still below what it started at last week, even if it just recovered to 1750, right? These would be worth about $1 a piece. All of a sudden, we're starting to claw our way back a little bit, right? If Roblox recovered to that 90-ish level, this may go back down to 4.5 at some point. We get a little money back on that. DraftKings, 28 strike puts. I think when the market closed last Friday, this thing had a little bit of a run after hours, right? It's trading right around 28 a piece. So if it stayed at that price level, these would be worth about 10 cents a pop. Fubo, let's just say Fubo stayed flat. I think it's going to rebound, but if it stayed flat, that's that. We're going to get the premium off the calls. We're getting the premium off the puts. Robinhood is right around 16 a share, right? If Robinhood stayed right where it is at 15.89, these would be worth about 11 cents a share, per option. And then BKKT, again, just assuming that one stayed dead flat, we get the premium off the calls. We get the premium off the puts. And if Open Door stayed flat, there you go with the premium off that as well. And all of a sudden, we're now in a situation where even though we lost $8,500, if we get a little bit of a rebound from Palantir and everything else literally just stays flat for us, we've already made back what we lost, and we get back down to, minus 100, and we could do it all again next week as we try to push towards a profitable January. But, big point I want to make is that, we saw that we've demonstrated in 2021 how quickly we can recover from something like that, even as bad as last week's scene with the defense that we played on a lot of positions that we're currently holding. We could recover this terrible week, by Friday. I would love to be talking to you guys next Sunday night and say, hey, we're now profitable in January. Let's talk about how we're going to keep it running. I think goal for me, realistically, is just to break even in January after how bad the first week was. But, this is not a terrible place for us to be. There's definitely a path back. And, it's one of these things that's not an unrealistic path back either, right? Other than Palantir maybe jumping $1, the rest of this was done under the assumption that the stocks stay entirely flat. So I'm pretty happy with what we've got right here. Obviously, this is a number that is not exciting to look at, but it's nothing that we haven't looked at before. If you're just now joining us and following along with us, and this is kind of your first big losing week, it's definitely tough the first time around. I'm not going to lie to you and, blow sunshine up your ass and say, it's super easy. You're good. Don't worry about it. Money is important. And if you're not treating money like it's important, you're probably going to lose it. But if you're worried, that's good. That means you value your money. But the emotional part of us trading and using the strategy, is such a tough part to master. And I got a lot better at it having to take an enormous loss back in 2020, which, for the purpose of transparency, let's show you this one right here. There you go. In October, we lost almost $50,000 in the market, which again was, almost recovered by the end of the year right there. But that was what really did it for me. Some of the best lessons are some of the most expensive lessons sometimes, but getting that emotional part of the trading and just learning to trust the process. We have an entire successful year laid out of it in 2021. A lot of different examples. Being part of our HT community is something that really helps as well when you can get a little bit uneasy about losing money. It's never fun to lose money, but the point is we have all the time in the world. Money comes, money goes, but in the long run, the idea is we're going to keep slowly compounding these nice gains that we set ourselves up for on a week-to-week basis. So let me undo all this. This is where we're sitting. I think we've kind of laid out the case for Palantir, Roblox, DraftKings. DraftKings, let's talk a little bit about. And I guess from a high-level perspective, we're about to get into the conversation of what looks good for the upcoming week. If you're not in any of these, starting off with lower strikes for something else, I think would be a great place to start because it means you're already beating what we have from a break-even price perspective. And a lot of these, like even Palantir, right? We sold, we've been rolling this one for a little bit, but even I think with it trading at 16.56, you could even get that 1% ROR down at 15.5 and give yourself another dollar cushion. When the market maker move up here is telling us that we really only expect a 53-cent move in the stock for the upcoming week. So that's a good place to start. DraftKings is one. We have the 28 strike put, and we have this 28 strike put because yesterday sports gambling and the application that they have was rolled out legally in New York, which is a huge gambling audience. So normally, I would have rolled this thing down. Would have rolled it out, maybe been a little bit more defensive, but I wanted to get a little bit aggressive and sell a slightly in the money put just to leave myself a little bit of upside because I think that New York thing is going to be a pretty big deal. I don't know when numbers and the results of how that went are going to start rolling out, but that was something that I was pretty bullish on, and that is why I entered into the 28 strike put as opposed to going something like 26, 27, 25. But again, that's just the game we play in the market, right? If you have a stock that you say, HT, I noticed that you sold, a couple strikes out of the money on, but I really think this stock is about to have a good day in the market, you're more than welcome to make that trade-off between return and cushion, right? That's kind of the balance that we play. Now, I would never suggest going like $10 into the money or something crazy like that and try to get an insane amount of upside. But, there's nothing wrong about making the discussion or maybe making the decision between going for a 6.26% ROR right here or maybe getting a little bit safer with the 26 strike and going for a 2.44% ROR. That's, I don't think, ever something that I would tell you, you've made a mistake doing this, especially if you have a really decent hunch on the stock that you're about to be playing. So that's what we do with DraftKings. And I think we've kind of talked about the rest of these, right? Fubo, Robinhood, BKKT. These are all things. Maybe BKKT, I don't know if I would get in unless you were comfortable with the potential downside on SPACs. But, that's what we're sitting at for the upcoming week. And that's kind of the good starting point. We've got this, I finally made this into its own little Google Word doc here, if I could find it really quickly. There we go. The HT cheat sheet, bringing it on screen right here, very slowly with my trackpad. But this is kind of where we're going to outline as we go through the options for the upcoming week, what we think is a good idea. We categorize these things in our profit tracker, right, as safer trades or premium chasing plays. But, I kind of made some high-level notes about what we wanted to talk about. Earnings, 10-day trades, which we haven't talked about too much, but I'm hoping to have a video done this week to explain that strategy a little bit more. IV reversion, we're working on having that alert bot for our premium members in the Discord server, and I think, there isn't a reason we shouldn't be able to have that done by the end of the week. And then an oversold alert, because we like to talk about RSI so much as far as targeting setups in our group right here for our strategy. And that is something that once I get a couple of those scanners built out a little bit, I think is going to be a very useful area to start picking some trades from. So that's what we got right here. We're going to add to this as we talk a little bit more. But again, DraftKings, Palantir, we've talked about those. Let's talk about something that we don't have on here, which is going to be GSAT. This one's interesting. It came up in the scanners that I had going. So if we'll look at GSAT, this is one that may be familiar to you because we've actually played this one before. And we played this one before via the IV reversion strategy, right? If we go to the 1-year chart, you may recognize where we jumped in on this thing. And I can't remember. I don't think it was back in February. Maybe it was back. I don't remember when it was exactly. Maybe it was September. Couldn't tell you. But I know we played it at one point last year on one of these big gaps up because that created a bunch of premium in the options. But now that it's approaching this $1 level, and I think it's helpful if I draw this $1 on here and extend this thing out to the left, this is a decent entry point from, a 1-year perspective. Now, if you go beyond a year, you can see that it's trading around 50 cents a share, but there's a lot that's been happening with this stock over the past year or so, which gives me decent confidence that's going to stay up here, right? They're a satellite technology type company. I think the big rumors that have been going around are that they're going to be integrated for the satellite phone functionality for the iPhones. So that's kind of where a lot of this hype came from initially. And I think, there's enough of that hype to kind of keep it elevated at this level. But another good thing about these is they have weekly options. So you don't have to go have your money locked up for for a month or so at a time, which is really nice from a flexibility perspective. And even more so beyond that, right? We've got this ROR number that we like to look for. We like anything above 1%. Sometimes with the riskier ones, and this is definitely one that I would put under that premium chasing category, this is not a bad place to be. A 3.63% ROR. We'll remember that on a 1-strike put, that would put our break-even price. If you get we'll be conservative. We'll say you get a 3-cent fill on this one. That would put you at a 97-cent break-even price, which is right down here. So not a terrible place to be. Obviously, this is the 3-year chart, a little bit scarier. I think if we go on the 180, you'll find a little bit more confidence in the price level. But not a bad place to be at all. And I'm pretty happy with the idea of potentially entering into those as a little bit riskier of a trade. Wish is also something that I didn't put on our profit tracker yet because I opened that at the end of the day on Friday. But, as seen by the multiple sets of red lines on here, it's something we're definitely familiar with and have analyzed before in the past. 2.5 strike puts are what we went for on that one. I think you can see, there you go. We've got that red flag right there. Very similar ROR from as GSAT that we just looked at, right? We've got a 3.52% ROR right here and a decent cushion. Well, remember, I think we got a 9-cent fill on these, meaning our break-even price would be $2.41. That's a decent cushion, right? MMM has a pretty wide move, relatively speaking, on this thing because that's over a 10% move for a 276 stock. But lower end of the range would be 240. That puts it right on our break-even price. That is a place that I'm pretty happy to be. So if we head back to the charts, 250 is lower than this thing has ever been before. There you go right there. We liked the value prop on that. That is a 3.52% return on risk for the upcoming weeks. Those are a couple I'm going to throw on the HT cheat sheet right here. If I expand this really quickly, GSAT, we've got those in there. Wish, we're going to throw the 114. 2.5 strike put in there. And another interesting point that was made by one of the members in our premium chat was, we like to target above a 1% ROR on a weekly basis. How about these 2-strike puts right here, right? We get the 1.27% ROR, and I don't hate that idea either, right? Because, if I thought a 2.5 cushion was good and we bring this thing into like the 20-day chart or something, if 2.5 is good, then 2 must be phenomenal, right? They don't have earnings or anything coming up, so this thing would literally have to lose about a third of its value for those to lose money. Now, the one downside of this is, with these, we could take decent profits at the beginning of the week if Wish takes off or something like that. Downside of these is that you really aren't going to want to close these out for a 1-cent debit or anything like that because that takes either half or a third of your max profit away from you. You're going to have these things run the entirety of the week and get all the way to Friday before they expire. But again, 1.27% ROR or 3.52% ROR, both good numbers. Again, we're just playing that game of trade-offs between, do you want a bigger cushion and lower return or a smaller cushion and a bigger return? Either way, you're getting a decent-sized cushion on both options right there. So I think we could maybe update this thing to say, or the 2-strike puts if you're feeling very, very conservative. DraftKings, I went with 28. I think 26 is a good entry point if you're not already in on the stock. Palantir, we highlighted that 15.5 earlier. 15.5p. There we go. 114 expiry on both of those. Fubo is one, directly that we're pulling from the list of stocks that we already have in play. If we, let me pull this off the screen and we can look at the option chain on here live. If we go to Fubo for the upcoming week, definitely one with the volatility that we've seen on this one, even over the past 20 days, right? Going from 1962 down to 1318. Even with that kind of volatility that we've seen, I'm categorizing it as a premium chasing play just because of that. But again, you can get that 1% ROR down at 12, but with how oversold this thing is on a 180-day basis, if we pull this thing back up, RSI is hanging down in that 30-ish level. There's already some precedent for a jump off of 18. This red line that we have right here lines up pretty nicely with an initial bounce that we had back in May of the prior year. So I like the idea of a rebound off these levels. So maybe jump it up to that 13, go for the 2.24% ROR. But again, still a pretty sizable cushion. Your break-even price on that one would be anywhere from 1273 to 1270, depending on if you get that 27 or 30 fill. But again, I think that 13 strike put for the upcoming week is a pretty decent one. So I'm going to type this off the screen really quickly. Fubo, January 14th, 13 strike puts. That's going to take us to our next trade, which we already have a position on, but is a great place to get one potentially started, is Robinhood again. You can get that 1.72% ROR at the 14.5 level. And again, that 14.5 level is below where it has ever traded, right? It IPO'd in that 30-ish range, bounced sharply off this 1482 level. 14.5 will get you right down here for the next 5 days. I don't think that's a bad place to be at all. If you're not comfortable with that, again, you could step it down another 50 cents as far as strikes concerned. Get down to that 14 level for a 1% ROR as well. But I think this might be another, I'll go Hood 114. And we'll say, 14p or 14.5 strike put on that one. And then the last one that I had highlighted, just notes-wise for the upcoming week, is going to be Open Door. With how sharply this thing sold off lately, where the IV is right now, you can get 1% ROR on a 10-strike put. That, I think, is phenomenal for something that was a former SPAC. You would at least think there's some decent resistance at that 10-strike level off the bat. So I'm going to put Open Door 114, 10-strike put for entry right there. And again, I went with 11 because we had some residual losses that we're trying to somewhat aggressively make back off the initial 13.5 strike put that we sold. But, it is what it is, one step at a time. We are going to, hopefully at some point, get that cash back. But, yeah, that's what we got for the upcoming week. Those were a few initial ideas. If we pop over in that HT cheat sheet, good Lord, pronunciation could probably work on that a little bit. But that's what we initially have right there. There's some interesting stuff coming up with earnings for the upcoming couple weeks. But I guess one thing we could talk about quickly, let's go to some of the scanners that we've been talking about. So let's get some fresh trade ideas in here outside of what we've been playing on a week-to-week basis. Because as we can see, even though fully cash secure, we've got a decent amount of money in play. A lot of that is coming from this leveraged Roblox play. So I think the way I really like to think about this cash secure number is if I zeroed this out, I'm down to 74%. So I think I still got a little wiggle room for a couple more trades to potentially enter into on Monday, or save my capital for, the end of the week if some of these trades continue to move against us. But, I don't think either is a bad option. But with that in mind, let's try to get a couple trades in the back of our mind outside of the scope of what we've already talked about to potentially set up for the upcoming week. So to do that, we're going to go to the scan tab in here. And before we get into our scan, don't think I'm going to let you off the hook before my nightly self-promo 30-second right here, hourglass-trader.com. If you're new to following along with us, we've got a great community of traders. We've got our premium Discord server right here. If you want to join, hourglass-trader.com, click on the Join HT Premium. I'm planning on coming out with a pretty comprehensive video of what all we offer because I don't think I've very clearly displayed it. But generally, the highest value I think of what we offer is if you go into our Discord server, you're going to have access to the premium chat. And if this can hurry up and load and, show what I'm talking about as I narrate this, there you go. Where you're going to have access to our HT trades, which is probably the single biggest value that we have as part of what we offer. You get alerted to entries and exits for every single trade that we made. So if you look back at 2021 and say, you saw that we made a 110% return in 2021. There you go right there. 109.43, excuse me, just short of 110. But, every single trade that you see in this tracker right here that added up to that $94,000 return that we had
in 2021, you can replicate that. You can 100% do exactly what we do, and you can do so via these trade alerts. They'll come via push notification to your phone, no different than if you were receiving a text. So that's kind of value number one right there. On top of that, we have a premium chat room where we talk about everything. We have the trade plans where we're going to copy and paste in that little cheat sheet that we have right there. Every now and then we'll write up a game plan. For example, Wednesday and Thursday, things were looking a little bit shaky in the market. So we wrote a game plan about what we planned to do from a defense perspective. So you were prepared going into the day on Friday. Now, I'm not signed in, so we can't read it right now, but I thought it was a pretty well outlined plan that we stuck to and got us to the point where we have some break-even prices that are now at or below the stocks that we're playing, despite the decent drop in a lot of these stocks. But outside of that, right, we've got a watch list. We have links to our option scanners that we're about to be using upcoming here. Decent value. If you want to take your trading to the next level, obviously, it's always going to be free to join us on the streams every single week. It's always going to be free to learn, go into beginner questions, watch our YouTube videos, and learn the strategies, right? The biggest goal that we have right here is to learn the strategy or teach the strategies, right? Because I don't think you should never have to pay to learn how to do what we do. But if you do want that little bit of extra help in your trading experience, I think what we do definitely provides some decent value as far as sharing examples of the trades that we're making, sharing how we're formulating our trade ideas and using all the resources that we use to do what we have done so far in the market. But there you go, hourglass-trader.com. You can get a free month if you sign up using our Webull referral link, which you can find right here under Get Premium for free, or you can get a free 1 week, no financial commitment trial on the HT Premium monthly. Any questions, feel free to reach out. But, I think anyone who has signed up so far and has been part of this, even though we had a losing week last week, right, in the long run, those who have been sticking with us can attest to the value that the HT Premium can offer us. So now that I am done with that self-promo stuff right there, there we go. Sam H. joined last week. Thought it was a rough start. Absolutely. It was definitely a rough start. He learned a lot and thought provided a lot of value to the members with prompt feedback tools and resources. There we go. Sam H is looking for a profitable 2022. And Sam H, we're going to get us there. Don't you worry. We're trusting the process. And one of the great parts about it, too, is just the community that you're a part of, right? It's tough to lose money alone. It's a little bit easier to lose money as a group. But we are all going to be we're all going to be in it together. Just because one of us gets in a trade doesn't mean that the rest of us can't. We're all typically in together on trades. We're all in this together, and we're going to win together. And another thing that Mark just mentioned in the YouTube chat, some other trades as well, right? We've got some volume weighted average price strategy trades. We've got some spreads in there that people like to call out. So it's not just me. We have several other talented, intelligent, and successful traders who are also bouncing ideas off one another throughout the day in the market. But there we go. So let's get into some actual scanning here, right? One of the things that is a benefit of HT Premium is if you go right here in Thinkorswim, load scan query, you're going to get all these scan queries that we have linked to on our website. And for those of you who don't have Thinkorswim, we've also recently made some updates to the website to have some other web-based scanners via like finviz.com or barchart.com to try to replicate what we do in here. But let's get into it, right? The very basic one, the high return on risk puts. And this is what it gives us, AVXL. And one thing that I do want to point out, and I think this is very useful that I've started doing, if you hit this settings cog right here, right, we want to filter through some of these because the big disclaimer that we give everyone at the top of the stream is that, hey, we're going to see a lot of really big ROR numbers right here, but it's important kind of not to take the cheese. You don't want to jump at the very highest thing because a lot of the highest things are the riskiest things. Like I'm sure if we bring up AVXL on this chart right here, we are going to see something that is in for a wild ride. Life Sciences, there you go. So this is a biotech. There you go. It's run from 171, spiked up to 31, an enormous candle back here, back in February of last year. Just insane price movement. And while we could lower our break-even price week after week after week after week, as we've demonstrated in a lot of these trade breakout tabs, biotech, sometimes the price moves far more quickly than we can do anything about and manage our trades with. So one thing that I've found is very, very helpful is if you hit the cog right there, go to customize, you can actually look up, I think if you type in industry, there you go. You could bring industry into here. And I like moving this up right here just next to the description. And then you could quickly filter whether things are, oh no, you can't do it right here, can you? See if that updates at all. Bummer. On the stock hacker that I was setting up a little bit earlier, it works on the stock hacker. However, the option hacker, I guess, does not pull the, let's see if stocks and options does anything here. A little trial and error on the stream. Okay, there you go. So I think with stocks and options, it brings up the tickers for the options that have come up, right? So a lot of these, you could kind of filter through these if you want to sort by industry. Say, you know, I think semiconductors or something are a little bit oversold. And you could look within these and you'll know that a lot of these have some decent premiums. Let's test this out like QCOM. The scanners to pull up things that are better than 1% ROR. There you go. You've definitely got it on QCOM. Okay, so that might be an easier way to do that. If instead of looking at individual options, if you want to go to stocks and options here, you'll be able to, you know, quickly filter out the biotech and the pharmaceuticals. So we have a question in the Twitch chat, an interesting question saying, what was our best ever trading day? And that is a very good question. I think it may have come pretty recently, back in December. If we go to that 2021 breakout tab that we have right here. Obviously, the way our strategy works, right, we're targeting a very modest return on a week-to-week basis, and the idea is that these high percentage modest returns compound into really nice annual returns. But sometimes when we have really bad weeks, you know, the following week, the way that our strategy is set up can be very, very lucrative. So if we go to the summary tab right here, we'll see that we lost 11,000, but the following week made back 9,500. We had a week back in February where we lost 7,700 and then made $15,000 the following weeks. So I think if we went back to that March-ish date, I don't really know where it is, but to avoid having you guys watch me scroll too much longer, this right here may have been, you know, somewhere in the midst of this was probably one of our best days trading. I know in December when we recovered this loss, one of the days was about a $9,000 or $10,000 day. So that was a pretty solid day overall. But, you know, I'm not too focused on getting these huge gains on a daily basis. If I'm getting a $10,000 gain in a day, it is because something has gone terribly wrong for me the prior week. So I much prefer what we saw in the back half of 2022, where we were making, you know, $1,000, $2,000, or $4,000 a week. But, you know, sometimes that kind of stuff happens. But back to the scanner. Let's talk about what we want to talk about. I'm going to go back to the options here. Sort them. Scan it again really quickly. And if these results come up, so I don't have to keep talking during some dead air right here. Come on. Please work. Perfect. Some technical difficulties. Fantastic. So whenever stuff like this happens, sometimes it's been a little bit glitchy for me. Sometimes I'll reload the scanner in there, then scan for it again, see if something comes up. There we go. That's the way to do it. So then we'll sort by ROR. There you go. You know, objectively have the highest one at the top. But again, AVXL, things like that, biotech, we don't want to really go into those. Going down the list, BKKT, we know about that one. Sava, UVXY. You know, none of these are looking too exciting, right? We know BIIB. Stitch Fix maybe is kind of getting down into an interesting range. Let's type Stitch Fix into there. We know a little bit about that one because I think we played it post earnings back in November-ish around Thanksgiving time. But again, you know, one where the market maker move says it's going to move plus or minus about $1. Let's see what the price action on that's looked like. We are not short of technical analysis on this one for sure. 17.5 looks like a decent base that it's been forming on the 180 day. Let's maybe start wide, zoom in to a more narrow outlook. Jumped up a little bit off that 17.5 level, but I don't hate that 17.5 level after how strong that support looked, especially with the 1.36% ROR. We know that would be 17,000 of collateral. Get about a 33% margin requirement on that one. So, you know, multiply this by 3, you'd be at roughly, you know, 4-5-ish% return on capital. You know, not a bad idea, especially if you want to get in the business of potentially diversifying a little bit between industry, because Stitch Fix is, you know, a little bit different than something like a Fubo or a Palantir with their business model, and definitely one where from the peak the price is a lot better than it was about 6 months ago. So many of these stocks, right, were, you know, hanging out in And again, you can go back to August of last year in 2019. You see another bounce off this 17.5 level where this red line sits at. And 10.9 was kind of the bottom of the COVID crash. So I don't pay too much mind to that. But knowing this thing topped out at 113 and now you can get back in where you saw previous support at the 17.5-ish level, I don't hate the idea of Stitch Fix at all. I wouldn't, call this one a safer trade because we've seen this thing run from 10 to 113 back to 19. But, not one that I would hate to put in the premium chasing category here, right? So if we put another row on this one, SFIX 114, 17.5 strike put. And let me make sure those are weeklies. I've been fooled like this before. There you go. They're weeklies. So yeah, above that 1% ROR that we look for on a weekly basis. Really decent cushion. We know that Stitch Fix is trading at $19 a share. The 96-cent market maker move would imply that the max downside here is about 18-ish per share. So 17.5 should be doubly safe if that makes sense. Let's pull this back off the screen. Back to the scan. Let's see if we can see anything else. And again, that's another good point I always want to make about the scanner, right? Just because you see things at the top, 19 strike put is the row that we were looking at right there. But if they have a 4.17% return on a 19 strike put, then you're probably going to have, anything above that 1% ROR a couple strikes further out of the money. So just because something's up here doesn't mean we have to take that strike. Another interesting one, maybe IRNT. I know we kind of swore off SPACs maybe 20 minutes ago. With the 3.5 strike put offering a 4.17% ROR, let's quickly see where this thing's bottomed out here. No coming up. It's bottomed out at 350-ish. It's very, very risky. Do not get me wrong. But like MMM has it at 13-cent move. That puts it at 348 for the downside potential risk here. 14-ish cents of premium on the 3.5s. That's going to give you a 334 break-even price, which is down here even further. And, beyond all this, if you go to the 180-day chart, this thing is very, very beat up. Even on the way down, it's typically not a straight line. You can see a little bit of a bounce at some point. But, maybe if you're feeling risky, we already have a couple risky ones on there with like Wish and GSAT. But, IRNT, not the worst one. I'm probably not going to get into it myself, but let's see. SDC Smile Direct Club. Good Lord. I remember this one because we used to play this thing at like a 6 strike or something like that. Yeah, at a 6 or maybe a 4-ish, something like that. Maybe 6 after this big drop off right here. This TA line, sometimes, Thinkorswim doesn't ever really delete these, so we'll remember that this is probably the level that we played it around. But yeah, it's crazy to see how many stocks like this just completely fall off the map. And again, you got something trading at 211. Now this one has a little bit bigger of an MMM, right? A 24-cent implied move for the upcoming week, which would put you down at like 286-ish, 287-ish. 187-ish. Whereas this would only give you like a 193 break-even price. So not quite what I'm looking for as far as a numbers perspective. HUT is an interesting one. I think kind of a Bitcoin miner was down at 3. I know I kind of swear off these setups where it used to trade at 3. It went up to 16, back down to 6. In my mind, I've seen many of these things finish out this way and get back down to this 3 or 4 level. But, from an ROR perspective, a lot of these look somewhat decent, right? Even at 6, you might be able to get a decent return on that, a 1.78% ROR. But 6 is down here. We have precedent below 6. This just isn't safe to me, so that's not one that I think I would want to jump in on. Lemonade is interesting because this is one, it got back above 100, was one of these stocks that would always come up on these scanners because, the premium was through the roof, but I just hated the valuation of, right? Even back at 115, we could back this thing up to a 3-year chart and you see it go from, IPO price of 50 up to 90, back down to 50, up to 188, which is just insane. And then all the way back down to 37.14 after bottoming out at 34.26 last week. Let's go back to that 180-day chart to get another look. RSI has rebounded a little bit right here, and this is the point we like to make about RSI. It gets down into the blue. All of a sudden, you have a rebound from 55 up past 40. Now, it's settled back at 37, but this is what we look at when RSI gets this low, right? Again, RSI got low back over here, spiked from 49 back up to 53. these are the kind of short-term relief opportunities that we like to look at from an RSI indicator perspective. But again, knowing that the low is 34.26, how far out of the money can we go here? And the answer is you can get 1% ROR at 32 strike this week. That is insane to me. I don't hate that at all. A $5 drop on a $37 stock is like a 15% drop in a week. So if we can have a max profit point at 32 right here, and again, let's make this maybe the 20-day chart to get a little bit more short-term of a look. There you go. I mean, RSI, it's already bounced off RSI, hanging back at 51, which suggests, at least on a 20-day basis, that it's neither really overbought nor oversold. But 32 is very, very interesting here, and almost one that I would consider kind of a safer trade because this is a little bit larger cap company. Obviously, we've seen, the back end of a really, really big run downwards, but just from a 5-day trade perspective, especially with the amount of premium you're looking at, near the money-ish, right? If you got to sign on these 32 strike puts, you're looking at a 31.70-ish basis. Then from there, you presumably could sell near the money for more than $1 and get yourself down to your 30 a share. But, not the worst one in the world, especially considering the fact that the market maker move has plus or minus 2 a share, which would put the low end of the move down to 35. So 32 is almost double the protection of the perceived market maker move. That is an interesting one. I'm going to just put that on the watch list. Not saying that I'm going to enter into that, but if there is a big red candle on Lemonade during the week, that is something that is going to be interesting to look at. I'm going to put parentheses if there is a gap down at open. So that's off screen. I'm working on this cheat sheet right here. It's for Lemonade right there. We're going to enter in those 32 Ps potentially if there's a gap down at open. I like where it's at right now, but again, it was up 5% on Friday. We like to look for some better entries as far as, entering on red days. So if it gaps back down on Monday or Tuesday or something like that, and we get some decent premium out of the money, that is going to be one to keep an eye on. But definitely one, to that point, to keep an eye on. Going further down the list here, nothing terribly exciting that's jumping off the page to me. Where's WeWork? WeWork is 9 strike. I don't like that a lot because it former SPAC right there, I think. TNA is a leveraged ETF. We don't like these bullish leveraged ETFs. I know a lot of people who are, in the option selling communities talk about them a lot, and rightfully so because they've been making it rain, so to speak, for the past 18 months or so. But that's just because the market is basically taking a straight line up. So while those are the ones that really kill it, like TNA, TQQQ, really kill it on the way up, definitely some serious risk when the market decides to take a downturn. So going a little further down the list, Overstock is one we played like the 59 level and made money on it. Now down to 53. I don't know too much about that to get into there. There is the discussion I think we wanted to have a little bit about with, what kind of stocks we're getting into, right? I think there's no question that a lot of the stocks that we've been playing are more so in that sphere of value type or growth type stocks, with these, pretty inflated valuations. And you'll see it with Fubo, right? I think we were preaching to everyone at the 25, 30-ish range that this doesn't match up with the valuation. And down here, is it still inflated? Maybe a little bit, but at some point the market valuations are always a little bit inflated for companies like these. With the rate hikes coming up, a lot of people think it's not going to be a great environment for growth stocks. So the idea is maybe to diversify into some more perceived value type stocks. But then that kind of begs the question, what is a value stock? Because the definition of growth versus value is a little bit nebulous. Things like Costco, where maybe quote unquote recession stocks, where the demand is relatively inelastic for things like this because people are going to need them. Whereas for Fubo, people would start cutting streaming services if they needed to cut those. Things like that maybe fall into the bucket of value stocks. I think another good way to look at it, if you go to the stock hacker, right, you could pull a lot of different things in here. So if you go to customize, I think you could bring in PE. Let's see. Ratio. There you go. Price to book value, price to earnings ratio. Things like that are generally good indicators of whether or not something is very fairly valued or not. And I think that might be something we want to take a little bit further of a look and maybe get, a quote unquote value stock watch list going to try to diversify a little bit in that regard. But, we kind of have our hands tied a little bit for the upcoming week because a lot of this is playing defense on what we had last week. I'm not going to, fully move away from the growth stocks because, as we've mentioned, a lot of the premium is just, quite frankly, too good to pass up. So I don't really want to sacrifice any of that. But, I think it definitely does help a little bit to move to, not fully growth stocks and try to find some other opportunities outside of that. If not for me, just to, at least provide you guys with that information to make some more educated decisions during your trading. So yeah, good points right here, right in the chat. I'm gonna pull it on the window really quickly. Look where the money's rotating into. Cost, McDonald's. Not sure what the ROR will get you on those, and kind of Dan's making a similar point, saying with value stocks, you lose a little bit of volatility, hence premium. Absolutely, right? And the thing with that is, we like to target this 1% ROR with growth stocks. Where on like a Fubo or something like that, we could go decently out of the money and still get that 1% ROR, right? We could set ourselves up with like a 15-ish% cushion. Whereas with something like a Costco, if you wanted that 1% ROR, you could get it, but you're bumping up against the money a little bit. And what scares me on some of these things, like you might be able to easily objectively say, Costco, value stock, right? But over the last 180 days, it's gone from 365 to 536. So the issue for me there is, like, yeah, you could say maybe the demand for something like a Costco is inelastic and it's a value stock. If we have to sell strikes that are, kind of bumping up against the price, and all of a sudden this thing retraces back down to where it was in the 450-ish level, we're sitting on a pretty sizable loss despite the, maybe well-intentioned effort to diversify into the value area. As we can see, even though growth stocks have been, quite frankly, shitting the bed lately, we still have break-even prices on these growth stocks that are very, very manageable because of that option premium. Like with Fubo, we're down to 14.12 in just a matter of a few weeks. DraftKings, in a couple months, we've gone from 36 to 27.52. I think that's phenomenal progress on those break-even prices. So I still don't hate the growth stocks, right? And at some point, the cycle is going to stop. The money's going to come back into the growth stocks. Is it going to be next week? I mean, obviously, I hope so. I'd love to, recover the losses that we had from the prior week. But at the same time, it might be a month. It might be 6 months. It might be a year from now. But so long as the premium still exists in these growth stocks and we can continue to have this downward progress on our basis, I'm going to continue to play them. And, I do think it would help a little bit to mix some more in there. So I'll definitely put some work in to try to dig up a few of those names and see if we could find some decent premiums for some of those value stock names. But for now, this is kind of the plan I'm sticking to. Obviously, it's gotten us success so far. We've demonstrated that even when things are going terribly for us, we can still kind of hang in there, so to speak, and we've got all the time in the world to keep playing those. But, that's the plan for the upcoming week. We could quickly take a look at the earnings, and I think I posted an image for the upcoming earnings in our Discord server really quickly. We could take a look at. Here we go. Earnings plays, this channel right here. I typically post, there you go. Here's earnings for the upcoming week. Monday, which is tomorrow, unfortunately, so we can't make a trade on it. I thought Tilray looked a little bit interesting. Nothing too interesting for the week until you get to the back end of the week with Delta, and then you have some financials reporting on Friday. No big opinion on those. I think you have implied movement right here. Delta's only between 3 and 5%. A lot of decent opportunity when you get a little bit higher, like you see Tilray at 15%, and that's when you can sell those options that are super, super far out of the money and get some decent premium on those. But I think for something like Delta, right, if we take a look, we know they have earnings coming up on Thursday. If we take a look at the 180-day chart, right, there's a range between 33 and 48. And I can't imagine that if we looked at options for the upcoming week, that if we go down to 33, right, if Delta had bad earnings and returned to the low end of the range, just back where they were trading on, December 1st, which is just over a month ago, 33, there is zero premium at that level. You have to go to 40 to get 1%, which is insane, quite frankly, for a company that's about to report earnings. So that's something we're staying away from. We definitely want to, when we play earnings, skew towards those positions that are a little bit higher on the implied volatility chart. Because, for example, we're not going to be able to play it, but Tilray is a good example, right? We looked at Delta. You couldn't go anywhere near where the range of the stock on the 180-day chart was. But for Tilray, right, we see it's kind of bottoming out here. So from an entry perspective, looking pretty good at 662. And if we wanted to go super far out of the money, we can go all the way down to 5 and still get a 1.32% ROR, which is above that number that we look for. And again, if we zoom into the 20-day, we'd have to zoom out on the y-axis. We could basically set up a trade where the cushion is all the way down to here, and we would still get our 1% ROR. So Tilray is one where, really high IV for the upcoming week. Even just the implied move here, which is generally kind of overstated as compared to the market maker move. Even the implied overstated move right here is $1.06, which would imply that the low end of the range is down to 536, which the 5 strike put would again be decently clear of and would still give us that 1.32% ROR. But we're definitely going to keep an eye on earnings because earnings season is about to be in full swing. That's the great part about earnings season is, when it goes away, it happens 4 times a year. So just hang tight, and it'll probably be there sooner rather than later. It'll be there before you know it. But nothing too exciting from an earnings perspective, so I'm kind of going to stay away from that a little bit. We've got the 10-day trade strategy for earnings that I'm probably going to want to be setting up a few of those for the coming weeks. Definitely in the progress of making a video on that one, so expect to see that one soon. We'll talk about that a little bit more next week because it's not terribly relevant for what we have in the upcoming week. And then kind of last but not least, we're a little bit behind on the HT giveaway, so let's update that for you really quickly. The last entry we had was Ryan B, and I think I'm going to have to scroll up a little bit to find Ryan B's entry. There you go. So we've got some new people in here. We've got Andy S in the YouTube chat. We've got VS in the Twitch chat. We've got RNPF08 in the Twitch chat. We've got KB in the YouTube chat. What's going on, KB? We've got Boston13 in the YouTube chat. We have John Housley in the YouTube chat. He's got the Tennessee Vols profile picture right there. Shout out to Jawan Jennings on the 49ers. Big game earlier today. Former Tennessee Vol right there. There we go. Okay. Any more HTs that we have in the chat? Last call. We have Mahir. Mahir, what's going on? Gave you a little shout out earlier on your Wish 2-strike put call out. We've got Suraj in the YouTube chat. We have M Jr. in the YouTube chat. And if I keep scrolling down here, we have a few more going. We've got Cliffo. We've got Rain and Thunder. We've got OTOBEIT. We've got Mahir. We still have Mahir. I got Mahir in there. There we go. I'll give you a go Vols today, John. There you go. Okay, so we've got 35 entries. That is exactly how many we had last week. But yeah, just to cap things off really quickly, we've been going for about an hour and a half. Things almost over. Obviously, week 1 of 2022 absolutely sucked, but I think we have a really good plan in place between what we have set up here for the upcoming week where, even if things stay flat and Palantir bounces a little bit, we will have made back every single dollar we lost last week, and it'll be as if we wiped the slate clean, and we can keep moving forward with what we've learned and what we know. So super excited to see how the next 5 days in the market play out. Futures are relatively flat right now, so I'm not expecting anything too big. And, the good news is that, flat futures, boring days are typically pretty good for us. And I 100% forgot to put in entry number 36, which is Coastal Bassin. What's going on, man? So here we go. We have 36 entries in here. If you entered into this and you do not see your name, you have 30 seconds to throw HT into the YouTube chat and get yourself entered into there because I want to make sure I don't exclude anybody for this drawing right here. So I'm going to ramble a little bit longer for about another minute about what we have for the upcoming week. But again, we've got this HT cheat sheet. Let me pull this back on screen really quickly. I think we have some decent preliminary ideas on there. I'll probably be adding to it as the week goes on and posting those updates in the Discord server in the premium section. And I'm going to be posting these. Here we go. If this can load again. I don't know why it always kind of grays out and reloads when I go away. Here we go. Wait for it. Yeah, that's going to be screenshotted, and it is going to be thrown into the trade plans channel right here. We've been doing the cheat sheet. I got some good feedback on the cheat sheet. For example, December we did it, and literally every single one on the cheat sheet turned out profitable. Not the case for the 26 one. I think a lot of these ended up, okay-ish. BKKT loser, Palantir loser, but the others were all right. There we go. We have one final entry into the HT giveaway before we do the drawing. And again, if you want to be a part of these premium channels, get access to the trade alerts that we have, entries, exits, get access to the watch list that we have, our option scanners, get access to that cheat sheet that we're going to have, we're going to update throughout the week, and just be plugged into the community and the daily chat that we have, super, super active on a day-to-day basis as the market progresses. I'm not the only one calling trades out. I get ideas from the chat itself sometimes, and I'm always happy to give credit on those. But again, great place to be if you're learning, if you're experienced, and you want to add a little bit of value to your trading. I think HT Premium is a great place to be. Hourglass-trader.com, and you could sign up from there. So let me go back to the HT giveaway tab. Okay. The final entry number 37. Here we go. Belongs, if my computer can hurry up for me a little bit. Come on. Entry number 37 is going to be Corey Batenhorst from the YouTube chat. Welcome to the stream and welcome to the HT giveaway. So it is now time for the giveaway. We have 37 entries. It's final. Entries are in. Here we go. We're going to go to our trusty random number generator off Google. Minimum is 1. Double checking. Again, the maximum is going to be 37. Let's see who comes away with the win. And again, before we do this, I am not able to reach out to people in the chat themselves. So if you are the winner, please reach out to me via, Discord, preferably through Premium if you want to sign up for that. Wouldn't hate it. But reach out to me through Discord, reach out to me through Twitter, YouTube, you name it, just some form of communication. So you could give me your info so I could send you the HT branded Yeti tumbler that we are about to give away. If you don't send me your info, I can't send you the tumbler. Sorry, it is on you. But here we go. Drum roll, please. The winner is number 11. Congratulations to Mark G. Let's go, Mark G. He finally made it to a stream. He finally got it to YouTube. He got it figured out that he can use the YouTube chat because Twitch wasn't working too well for him. Mark G's hard work paid off for him this week as he has taken home an HT branded tumbler as the winner of the HT giveaway. Congratulations, Mark G. And I'm very certain he will know where to find me. But for those of you who are still on, we do this giveaway and the stream every single week, Sunday nights, 9 p.m. Eastern time. Last week didn't go too well for us, but hey, that's the reality of trading. Anyone who's being completely honest about their trading journey and their progress, they're going to show you that this is what happens. People that are hiding the losing weeks are, quite frankly, people who are not showing any losing weeks at all are probably lying to you. But this is the reality of trading. It's obviously important to talk about this. What's important from this point forward, though, is not so much that we lost money, but how we're going to make it back. We have a plan for it. One of these days, I will figure out how to get the Joel Embiid gift to just pop up on the screen and say, trust the process. Yeah, but that is exactly what we've got to do. Hang in, trust the process that we've outlined and that we've proved works week after week after week. And that is how, even though we've had a terrible start to the year, I'm confident that 52 weeks from now, we are going to be looking back at 2022 as a good one. But for those of you who have joined us tonight, thank you so much. If it's your first time, hourglass-trader.com. Feel free to sign up for HT Premium. There's also a link there to join our Discord server. It's free to join the actual server itself. That link is on the front page of our website. Always going to be free to learn the strategies that we run. But yeah, I think that's all I got for tonight. After an hour and 40 minutes, I would hope that's probably all I've got for tonight. You guys are probably tired of listening to me at this point. So we're going to sign off by saying thank you for watching. This has been the Hourglass Trader, where as time passes, we make money. Hopefully we see you guys again next week with more money than we currently have right now. We've set the bar low. I think it shouldn't be too hard to do a little better than how we've previously done. But thank you guys for tuning in. Hope to see you guys next week and throughout the week in the Discord server. Thank you so much, and good night.